Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to late session update for Friday, November 21st, 2021. It's 2:33 p.m. Eastern Time. Probably be my last video of the day. I think I'm probably going to shut down early. It's been just a very profitable trading week, past couple trading weeks with this volatility. And I had just closed out the longs that I reversed to in this morning, covering shorts right at the lows. Got that post out to you right here, right after I reversed, and so I milked up the better part of the 3% and turned around and just shorted a small position. I may or may not take that into the weekend. Here's what I'm going to do. So what I told you earlier today, that the individual stocks and the crypto, the Bitcoin, TTD, Coin, COIN, Coinbase, Hive, Mara, and Riot, those are small starter positions in swing accounts that I am going to take home over the weekend. Those will be long. I'm going to wait and see how we open on next week. Remember, next week is starts the holiday week, and so kind of anything goes. Whipsaws are likely. This will probably be my last trade for the day in the trading account, and I'll probably go flat in that, if anything small. But the reason I closed out here, you had this reaction high, this reaction. It's a support level on the 5-minute chart, a QQQ. This is a 1 minute. I'm sorry, I've got it on the 5 also. 5-minute chart right here, 596.88. And then I have the same thing on SPY, and it also happens to be a Fibonacci retracement level. So again, this is active trading stuff, guys. I know I'm imagining that, those of you that are trading, your head's spinning right now with the reversals that I keep posting. And again, that's just where the money is. You could make, 3% or a good part of it. Actually, that's SPY. QQQ was higher. Or actually come into the day, make 1-2% on the downside from where we, reversed or went down after yesterday's close. Where is it? Right here. Here it is. I had to turn on yesterday's close line. That's where we closed. That's where we opened today. So we dropped down about 1% or so into the close. Into the lows today. And again, those lows, for all the reasons stated, that was the hard reversal. Hard as, an aggressive full short, close out all shorts, go hard long. And that's it. So you could easily just keep drifting up today. Again, today had some pretty technically bullish technical events, meaning we even undercut, which is even more bullish on QQQ. Remember, I watched QQQ, SPY, and the market leading stocks. The fact QQQ undercut, as I say, a lot of traders, I believe, trade in a vacuum. If they're a QQQ trader or an Apple trader or a Bitcoin trader, whatever, that's all they're watching. And so if you're an Apple trader, well, you would have shorted that break of support, but you got smoked today because there was a false breakdown and with a hard reversal. Had you been watching SPY and Apple and NVIDIA and the key stocks that matter, you wouldn't have taken the short trade because it's a successful defense of that support level. And so there's a great example, if nothing else, a good takeaway. Now, remember, I'll continue to say the same things over and over. We have some pretty powerful sell signals, including the break of the primary. This uptrend line this is SPY. I'll get to QQQ in a second. Breakdown and backtest of the primary trend line on SPY and QQQ. It's kind of a continuation of break of the primary, back test of the primary trend line, and then a break and back test of the secondary trend line with those bearish engulfings. So let me just do this for you real quick. So this morning, both in that post I got out to you on the reversal and then the follow-up video, I showed you a lot of bullish things. The fact the financials are holding up, check. And this could easily carry in through next week and could potentially be the catalyst to new highs. I'm not sold on that yet. I'm very open to it. But again, I've sat here in the last, especially today alone, point out bearish developments, bullish developments. And when things aren't that clear, why bet it hard? In other words, if someone's going to come up to you in the street, say, here, we're going to flip a coin. Every time, you win, we'll call heads or tails. You make $1. If you lose, you pay me $1. Well, you can sit there and do that all day back and forth. If you're going to give me where every time I win the coin toss, I get $2, but when I lose it, you only get one. Those are the type of trades I like, where not the binary odds. So anyway, that's where I'm at. So this is just kind of recap where we're at on the weekly. Is QQQ. We put a bearish engulfing there. This is the primary uptrend line right here. We broke down, put the bearish engulfing candle, then we broke down to this below this price channel, and right now we're poised to close the week right about on that level. But unless QQQ does something really crazy, it's simply it's still going to close below this trend line here, right? You're certainly going to close below the bearish engulfing. And there's a point, I'm going to get back to this. And then let's not forget too, I showed you that the PPO histogram has flipped last week, and today is Friday. There's no chance of, very little if any chance of this flipping back to bullish this week. So this is where I tell you, I take multiple time frames. So a lot of bullish stuff to like today and to go home long on the daily and even 60-minute charts. But this is more significant. And if you look what happens, usually once a top is in, that was that bearish engulfing candle that what came with a divergent high there. And sure, I'm sure there were some nice counter trend rallies just like in here. You could probably go back on the site and see what we were doing then. I know we were short, and I know we gained some counter trend bounces along the way, including this one. Well, one off the 200, the initial tag. But that's on that 60 little, what I've been doing lately, 5, 15, 60-minute charts. But usually, or quite often, I should say, once a top is in, and once you have solid technical evidence on the daily and weekly, that's it. And those little 60-minute bullish developments and successful bounces off support are just speed bumps on the way down. You can see red candles until the first, green week was really a flat. That's a green candle, but it's a doji. You didn't go anywhere. It was basically a flat week and then just a continued resumption. So, those that rode this out or kept buying the dip didn't have any reprieve. First of all, they would have been stopped out or just, drawn down to the point of oblivion. There's a 25%, 26% drop. And remember, that green candle there, you went down that week too. So it was almost, since the sell signal week, 1, 2, 3, 4, 5, 6, 7 weeks. And it was during that 7th week that the reversal came and the bottom came. Here, same thing. You had a top. A lot of selling. There was a slower roll right there, and then it started dropping big. And let's look at the semis. Let's not forget the semiconductors, which I said when the semis break, the market will most likely break. Now, like I did say, I still think we need the financials to break. But again, this reminds me a lot how natural gas often trades in Bitcoin. When they want to move, they're usually full throttle up or full throttle down. And so, this sector walks higher and with pretty well-defined trend lines. And when they break, I'm just going to measure. These are just the last few. Well, we can go all the way back. We can go back as far as we want, but let's just do these last few here. So you had a well-defined trend line. There is your weekly close below it, confirming a sell signal. And from there, it fell another 13% before it bounced. This one here, there was a trend line break, solid red candle, and it dropped 25%. This one here was a rejection. There was not a trend line to break, but it was a horizontal trading range, and they continue to backtest the 200-day / 40-week moving averages. Oops, sorry here, 40-week. And it's same as the 200-day. And then once it was clear to the traders that the semis couldn't get back above there, you had just nothing but red sticks. And that was a drop of about 34%. And it didn't let the longs out, right, with any decent bounces other than, again, if you're gaming the intraday charts. So where am I going? Okay, well, this one didn't pan out to be much. It was a sell signal, break of an uptrend line. It was a nice correction, but nothing, it was from high to low. It was about 6%. And we went up again. So, hey, guys, maybe it's that. Well, so far it doesn't look like that. What I can tell you definitively, and I did, we had a sell signal here. That's a solid red candle. I don't have to squint to see if it broke down. And this is only week 3. So if it repeats in any of these fashions And again, this is just a much bigger divergent high. It has the potential to just wipe things out. So there it is, guys. That's um, uh, um, I'm more apt, and I still haven't made a decision. You know, what I'll probably do on those swing accounts that I told you I pivoted reverse today, and took the those handful of you know, the individual stocks, TTD coin, and the Bitcoin related things, Riot, Mara, and what's the other one? Whatever it is. I'll probably hedge up in that account. I think that's the wise move to do. So take some broad-based index shorts or other things, indirect hedges against that. But again, so I wanted to just end the week here with the big picture and reiterate that nothing has changed on the weekly charts. If anything has changed, we've just further affirmed these sell signals we had last week. Yeah, that's what's changed. So this bearish case to be short the semis, which kind of means to be short the market and tech, has only firmed up. What it is now, too, it's a back test of this previous all-time high right here. I just put a line there for you. So, again, anything could go. So my takeaway is, yeah, I wouldn't go very hard, long, or short into the weekend. I've given you guys plenty of different things on the charts to watch, some trade ideas, giving you my thoughts. There's that. I'm just extending that trend line. By the way, that was just an extension. This was a trend line that broke here, gave us that drop, and that's just a back test of that. So just like, remember, everyone's right now focused, the media's focused on NVIDIA's little big reversal yesterday. You know, all the pundits were coming foaming in the mouth bullish. Yes, I had CNBC on. That's the times I turned it on to see when NVIDIA earnings come out, just to hear the numbers. And of course, they march out the bull brigade like they always do. And now, you know, a lot of them backpedaled after the reversal. And I'm sure they're foaming a mouth bullish again today. It's almost comical. So you just have to know that, again, this is all a function of a lot of stuff breaking down. Some things still need to go. Again, until they go, I've already covered that many times. This is one. I'd like to see this level go on a weekly basis. The financials, I want to see them take out the 200s right there. And this is also it on the weekly chart. This is the same level I've been giving you on the daily, about $51. These blue lines, again, are on the weekly. They're 40 weeks. Same thing as the 200-day moving averages, because there's 5 days in a week. 5 times 40 equals 200. So this is the same things right there. And we're testing them. Sometimes you test them, bounce once, and then take them out. You know, in a bull trend, you're going to test by pullbacks to it. But eventually, sooner or later, the 200s on all bull trends go. And then you get corrections in bear markets. So that's it, guys. And, you know, I know this, that, you know, when you have a lot of excessive sentiment, we're just coming off, yeah, obviously, bearish sentiment spiked up recently with the correction we just had and the volatility. But, you know, people have been, this has just been a very, very hot, frothy, excessive, you know, sentiment, bullish sentiment market. And those kind of markets tend to want to trap as many traders on the wrong side of things as possible. So anyway, I don't want to be trapped in either direction. So I just told you what I'm going to do. I'm going to take those, you know, those, you know, individual stocks I shared with you today, and a little Bitcoin home. Not a lot, because Bitcoin still hasn't showed me a lot of, you know, it hit support, hit those targets I gave you. You know, and I'm not sure if I shared this one with you guys. I took a screenshot of this morning. I know I had a friend of mine that asked me for, you know, levels on Bitcoin. This is it right here. Taken at 9 o'clock this morning. You can see on the lower left corner. It's same levels. It hasn't gone anywhere since. But we're at 81,042 or so is decent support, and this is really nice support. So like I covered that already in the earlier video. If we go down here, I'll be a buyer of Bitcoin down here, and we're in free fall. We could bounce, and I think I gave you, yeah, I did. I gave you other targets on the IBIT, but this is a level right here. I don't know. I thought I had this in there earlier. There's a first resistance / potential target. These are other targets. So this is Bitcoin. Anyways, that's it. So we either reverse here or here is my guess. If the world's coming to an end, that's possible, but improbable in my opinion. Okay, so that's it, guys. Financials had a divergent high peak, broke primary uptrend line, have been moving lower, but are at the best support level that they've been at in many, many months, actually, probably in a long time. It is a support level based on my read on the charts, right or wrong. It's a level that I think will go, but it's a matter of you don't want to ride it out if it wants to go, after the first of the year. Again, you want to play that seasonality game. This week's bullish, and December's bullish, Santa rally. But you know what? The thing about that, guys, is that when that doesn't happen, that's when everybody expects one thing and the other happens. Let me go to the VIX here. I did this earlier today, not with you guys. I was looking at it myself. Remember also the VIX today again keeps hitting my 2862 target, and it's either going to break out of the gates, break out of the barn here, knock open the barn doors and run out of the stable, or it's going to do what it does, perks up a little, goes back down again. Ultimately, you get one of these big spikes, and that could come next week, or it could come at any time later this year after the first of the year. But here, that whole seasonality thing, I'm going to show you something here. So if you look and follow my crosshairs, a pop-up box on the left is going to show you the date. So today's November 21st. So we're at the end of November. And again, November, usually bullish. So here's what happened the last time. The VIX had already started to pop a few times, but it was already coming down into the end of the year. You got your little Santa rally or whatever, so the VIX bottomed out and went down lower. The year before that, 2023, it had already long peaked. It was already in a downtrend, meaning the market was rallying, and it just continued lower to after the first of the year. Again, Santa rally. This is the end of January and then December. The end of November. November and then December. Same thing. Bottomed out right around the first of the year, But the year before that too, it was still heading down. Again, this is seasonality. Usually it's going down November, little pop. But here's one right here. This one right here, this is around the same time. We had put in a divergent low. We were moving up. We were in an uptrend. We had just made a higher low, like here. Remember, this is where I started getting bullish again on the VIX, this divergent low. There's your breakout. And we've been walking higher, just like this. After that divergent low, we had 1, 2, and then you can see right here, and then a third spike up. This is November right here. We had another pullback, just like now. And then you can see this is where the market was caught off guard, because I'm putting the crosshairs. There's November. Let me get it right where we're at now, 18th, 19th, right about here. And then boom, there was one last pop. So that would have been the week of Thanksgiving, right? Here, I'll go in a little closer so you can see it. Anyways, this is what I do when I play around, study the charts. And I know this too, and that's why I said you can't bank on seasonality. It makes sense if you're, if you have 100 years to invest, you can take those odds if you're getting equal, if you're getting paid out on them. You bet it long enough, you bet on a November or December Santa rally or the small cap effect, January rally in the small cap stocks, over enough iterations or betting periods or years, you're going to, at least if history holds up, no guarantee that you're going to make money. And there's reasons for it too, year-end window dressing, 401k inflows, all the other stuff there. But that's it. So there's that's what happened back in 2021. And, so a lot of folks were asleep at the wheel or long betting on seasonality, and the VIX from the very low point, I just measured from where it took off around this time of last year, it had another 70% or so pop from that low right there. I can't grab the trend line or it moves everything. I'm just going to grab from that price level, and that was about 136% rally. So anything goes. To me, it's a little obscure right now with everything I just spent the whole week covering, including today. So like I said, for me, I'm going to sleep easy this weekend, going very light, maybe even flat in the trading account. We'll see and pick it up next week. I'll tell you this too, Thanksgiving week, I don't trade a lot because of the whipsaws and all that. If I see a good opportunity, if something big happens, I will, and I'll be in front of my computer getting stuff out to you. The comment sections have gone almost dark. I think people just, I don't know, just have given up on the market, given up on shorting. But again, it's been extremely profitable last few weeks. We threaded the needle down and just, I keep saying I would try to get away, and that was my plan, to get away from the 5 and 15-minute charts. But the market, it's not that it won't let me. It's not time yet. Once we take out this T1, once we clearly take out those lows, including on the SPY, including the support we're at on the financials, then yeah, it's going to be, I think, a quick swoon down to T2. Do not pass go, do not collect 200. It should be, that's my guess. So, and all right, guys, so that's it. So to reiterate, this market may go up at the end of the day, but based on all that's gone on lately, you always say bulls make money, bears make money, pigs get slaughtered. It's been a heck of a day. About a 3% round trip on the NQs. Several times that, of course, on my VIX future. I told you when I covered the NQ shorts that I also reversed the VIX long. And so that's it. So I have mild, reverse back mild. And you know what? I've got to cover. They're probably going to bounce here. I just wanted to get a quick pullback trade right here. And we're coming up on my target now, right as I've done the video. So could allow a little bit to run in case we come down here. Yeah, that's what I think I'll do. I'll take profits on the half here, put a stop, trail arrest down, just in case it reverses. But if it doesn't, then I'll stay in half, and then I'll see if I can milk a little more out. And that's it. I'm going to wrap up here. I'll answer any questions before I shut down for the week. And that's about it. This has been Randy Finney with Right Side of the Chart. Have a great weekend.